where I just got lucky is that I was able to just kind of see all these strategies. I knew who was making money, who didn't make money. I did my grind. I put my time in. I put my hours in. I put my years in. And, before I knew it, I was working with like our institutional traders. And that's when it was just like light bulb, light bulb, light bulb, light bulb. And that's where I picked up like just the strategies that, strategy I used, primarily today. And I would have never figured this out on my own, period.
Well, we're all glad that you did. Speaking of stripes, you're also in the Air Force.
That's true. Yeah. Proud Staff Sergeant, Airman of the Year.
Wow.
And yeah, I joined the military. I felt like that could have been a potential career for me as well, but I never really. I went into the military with like, okay, I'm going to get in here. I got a family to support. I got college and home and everything to kind of pay for. And I knew this was going to be the end goal. Like I knew I was going to get into trading, investing. I grew up around it. My whole goal, it was just to kind of get to where I am now. And the Air Force was a big part, of that for me. Also taught me a lot about discipline, which was obviously a big thing for trading as well.
And also not only trading Forex, but also teaching it for over 10 years now, a dozen years.
Yeah. And this was even getting into the actual like teaching things. It's just like a series of like fortunate blessings, I feel like in my life. And I just like, I kind of got, I feel like I've always kind of had a gift for explaining things and kind of passing things along to people. And then I had this like all this like currency background, and I wasn't even really thinking about, okay, I'm going to educate people in this. And all of a sudden this like opportunity was kind of presented to me. And then I just realized like, you know what, this is great. I love doing it. I love being part of communities. And then, yeah, I mean, I've been in financial markets, really my entire adult life. And then, this whole like, teaching side of it, I mean, I'll be going on, God, I think I'm moving into like this is like my 10th anniversary. Like, wow. This is it, like this year. So,
wow. Well, I know, in our interaction together, now that we're working together, I see the people that have been in your universe. They love you to death. That I can tell you, from what we've seen. So hopefully tonight we're going to introduce the David Warner Forex trading universe to a whole bunch of new people and going forward. So David, thank you. It's all yours. I'm going to hide in the background. If you need me for anything, I'll be here.
All right. So let me, I'm going to pass, make sure I can share my screen here. You got to, if you could enable me for screen sharing, please.
Okay. Sure. All right. Should be good.
Oh, Roxanne, I see you, Trader Annie, which I know very well. Nice to have you back, Trader Annie. I'm just trying to catch up on some of the chats here, but okay, here we go. All right, can you see my screen?
Yes, sir.
All right, excellent. Well, listen, some of you guys know me, so I mean, some of this is you've seen kind of what I do, and for a lot of you in here, maybe some of you have never ever traded Forex before, and I just like part of what I wanted to do tonight is just kind of really just introduce this whole world to you, and really it's like it's all about how do I make dollars trading the US dollar, and like honestly that is such like a main focus of what I do on any given day, or even if I can even just go like I'm turning even just trading pennies into like major dollars. So I've already kind of briefly kind of introduced myself here, but if you guys have been like paying attention to kind of the headlines here lately, but the headlines right now have just been completely dominated, I feel, by just these like shifts in kind of this central bank policy. All of the global central banks have been on this like very aggressive path of like raising interest rates to fight inflation. And every single headline that you've ever seen about inflation, about raising interest rates, that could have been turned into a currency trade. So even just yesterday, I'll just kind of talk briefly about it. I'm going to kind of show you some of this stuff, and then I'm going to pull up some slides, and I'm going to, pull up some charts, and I'm going to show you exactly what some of this stuff kind of looks like on a chart and how that could have been a tradable event for you. But we have like Bank of Canada raising interest rates, pausing at a, hinting at they may be pausing interest rates. Right now, I don't know if you're paying attention, but like our dollar has been on an absolute tear to the upside. Really, I don't know if you guys, for those of you that are not currency traders, but until like October last year, the dollar across the board was hitting like multi-decade highs against all of our trading partners. And over the last couple months, there has been just these like minor shifts in Fed policy. And these minor shifts, honestly, I'm going to get into them a little bit ahead of myself, but like the opportunities that are starting to present themselves just as central banks are kind of adjusting their policy, I feel that we're on the cusp of some like major changes in currency trends. But a couple more headlines here for you. New Zealand dollar pops on higher hawkish Reserve Bank of Australia, Reserve Bank of New Zealand, Australian dollar slides, dollar slumps after CPI data suggests Fed may ease rate hikes. First, non-farm payroll preview, dollar selling opportunity. All of these, like sterling edges back to near 6 months peak, all eyes on rate outlook. Everything you see, like, even just kind of introduce this world to you, but like, what is Forex? Just to kind of start, like, for those of you who don't know much about currencies, I mean, currencies is the foreign exchange market, number one, is the most traded Forex market on the planet. Like, just to give you an idea, it's the biggest currency trade, it's the biggest market on the planet. We trade about 7 trillion, anywhere between $6 and $7 trillion, I think, in volume on a day. To put that into some type of context for you, I think the stock market averages somewhere around, I think, about like $550 billion a day. So you're talking about a market that is like 10 times bigger than the actual stock market. When we're trading currencies, we're going to be trading in actual, like we're actually trading in pairs. What you're looking at right now is some of the most popular currency pairs on the planet. You can see kind of the euro versus the dollar there. We trade in pairs. Basically what this means is like one euro buys $1.05 United States dollars, or alternatively, it would take me $1.05 to buy 1 euro. The currencies are always traded in pairs because it's like really what you're trading is the kind of the instrument in front. And then the dollar is like, how do I measure the appreciation or depreciation of the euro? But basically, we buy and sell currencies much like you could buy and sell stocks. The value of these currencies are going up and down every single day, and the opportunities to trade them are presented every single day. One of the nice things about currencies, one of the things that I love about it, is that it's such this like big kind of like a big macroeconomic market, meaning that it's really kind of like the big picture themes that kind of drive these markets. And so as I'm educating people on kind of what to look for and kind of what we do in this, we're not really like, we're paying attention more to kind of the big themes, like overall, like how is this economy doing compared to like, how is the Eurozone doing, like their economy doing compared to the United States economy, for example. We could say which currency is raising interest rates faster, who's got better GDP numbers, all of these different type of events kind of big picture events that actually move these pairs. Forex trading really is about turning pennies into dollars. You know, I'll give you just a couple of these pairs. You know, one of the things that I'm going to show you guys here in just a bit. You know, I look at a currency pair, and you can kind of pull up a chart. And one of the things that I'm going to show you here in a little bit is that, you know, when I pull up currency charts like this, when I pull up like something like this, or pull up something like this, you know, one of the things that I show and I teach people is that when I can, you know, kind of look at a currency, a lot of like the moves can seem and kind of look like somewhat like random, right? That's like, I don't know, like, you know, is a currency going up? Is a currency supposed to go down? And one of the things that I'm going to show you here in a little bit is that I can take these currencies and basically I can build them and put them into a structure, and putting them into that structure is going to make kind of looking at these and understanding these a little bit easier. To introduce, I'm going to introduce this market to you here, but one of the things before I do is I just want to kind of talk about some of the things that make Forex a little bit different. So first things first, what we're doing is we're measuring profits and losses in something called pips. So if you think of like if I was trading stocks, you're measuring your profit and loss in pennies. You know, I can stocks and go up and down, and they're going up in increments of pennies. If I was trading like futures, you're measuring your profit or loss in something called ticks. And when you are in currencies, we're measuring our profit and loss in something called pips. It's the smallest whole unit move that an exchange rate can make based on Forex market convention. It stands for percentage in point, but basically it's just a fraction of a penny. One pip is basically, 1 pip is worth 1/100th of a penny. And I'll show you what that looks like. So if I had like a currency pair, currency pairs, currencies are not priced the way that other things are priced, right? If I went to, say, a grocery store and I wanted to buy something, I'm not going to see 4 or 5 digits after the decimal. Typically, you walk into purchase anything, you're going to see just 2 digits after the decimal. Well, in currency trading, we're typically focused on at least 4 digits after the decimal. That 9 right there, that is considered, that's the actual pip, and that is 1/100th of pennies. And so the 0, this is what you're used to seeing in a store. And when you're currency trading, we actually take that exchange rate and we're actually even going out even further. So when we're actually trading in the currency markets, you're actually going to be looking at trading the market fractions of pennies at a time. Now, one of the nice things about this, and I'll pull up some charts, and I'll pull up some like hypothetical order windows and charts, and I'll show you. But one of the nice things about the currency markets is that whenever we're going to buy or sell anything at all, we can actually make the actual value of that pip as it moves up or down. We can make that value, how much we want to make or lose. We can make that number really anything that we want it to. And I'll show you that in a bit. But when you're looking at an exchange rate, basically what this means is that 1 euro will buy this many pounds, or it takes this many pounds to buy 1 euro. So in this example that we see right here, $1 would buy 136.64 Japanese yen. So if $1 buys 136 Japanese yen, which currency is stronger? I'll just kind of put it to the audience here. Yeah, United States, that's right. So one of the things, and I'm going to show you this when we get to when I can pull up an actual when I pull up the actual trading platform with you. But when we're trading in currencies, we're actually we're trading in lots. And what you see on the screen right here is some of the just some of the different ways in which we can break up a trade. And as you can see, based off of how you break up a trade, you can make that actual pit value pretty much worth whatever you want. I could break it up into kind of units in between as well. I don't have to go from 100 to 1,000. If I wanted to, I can actually go from 100 to 101, 100 to 102, 100 to 103. But what happens is that when you go from 100 to 1,000, you just kind of get into a different category. But one of the things that I love about currency trading is that it is very, in my opinion, it's very friendly for people that are brand new just to trading live money in general. When you're just starting out and you don't really have your confidence yet, and you're just I don't even really know if this whole trading and investing world is for me. I feel that this is one of the a great market to get started in, because it can be one of the most conservative markets on the planet. You can trade very, very small lot sizes. And if you wanted to, you could make you could say, okay, whatever trade that I'm going to place, I'm going to risk 25 cents to make $1. But you're still trading live money, but you're not really necessarily having to kind of put in or kind of trade big, right from the get-go. You could start off and say, hey, listen, I want to trade, I'm going to risk 25 cents and make $1. When I get comfortable with that, I'm going to risk $2.50. I'm going to make $10. Then I'm going to move to 25 for 100, then 250 for 1,000. And as you can see, it becomes all very, very scalable because of the lot sizes. One of the things that I also love about currency trading is that you don't necessarily have to have a lot of money to control a lot of money. Dean, I see your question. I'll answer that for you in a bit. But you don't necessarily have to have a lot of money to make money. I'll pull up the trading platform, and I'm going to show you. I'll show you a little bit of that. So I'm actually going to pull up this is we'll actually pull up one of the most popular currency players on the planet, and that will be the euro versus the United States dollar. So, for example, I'll answer your question right now, Dean. Owanda Owanda is actually one that allows you to trade in the nano lots as well. So let me just give you, I'm going to pull up an order window, and I'm actually going to show you guys a couple things. So first of all, right now, I'll even put in the nano. So right now, that is the nano, okay? So if I wanted to trade this 100 euros versus the United States dollar. So basically what that means is that if I say I buy this pair, basically with this 100, what that means is I'm basically going to buy 100 euros worth of currency. So each euro is worth $1.558. So you see where this trade value is? So if I buy 100, this is my trade value, $105.58. So $105.58. And in order to place this trade, now this is margin. Margin is basically collateral. Like, how much money do I have to set aside to open up this trade? It's not a cost, but what it does is it allows you to control more money with less money. So Forex has a leverage multiplier of up to 50. So what that means is that whatever money I have in my account, I can trade up to 50 times the value of my account. So if you look at this trade value where it says $105.57, to place that trade, I would need $2.11 in margin, basically 1/50th, to be able to place that trade. And so for $2.11, I can control $105. I'm borrowing this $105. That's my trade. And when I close my trade, I would get that margin back. So to give you an example, now I do these boot camps and I do these I do a lot of these trade setups. And one of my probably one of my more popular trade setups, there's quite often I'll just give you, it looks something like this, right? So it's like I'm risking 25 pips to make 100. So basically it's a 4-to-1 risk to reward trade, right? So this is just basically the power of it. So it's like when you're just starting out, just what I'm getting for those of you that are like brand new to this, the first thing I want to show you is that you can kind of like dip your toes into this. Like if I hit submit on this right now, basically the way that this trade is set up, I'm risking 25 cents to make $1. I need $2.11 in margin to do it. Once you start getting comfortable, you can just basically kind of start adding zeros to your trade size. Now, if I wanted to place this trade, I would need this much money in margin, $21 to basically control $1,055 worth of financial instrument. You know, I always like, because I've been around trading education, you know, for so long, you know, I've met a lot of people that are brand new to the financial markets, and it's not uncommon. I'll run into somebody, they'll come to me and I'll be like, well, you know, they're like, listen, I really want to get into this, but I'm not really quite sure, you know, kind of where to start, you know, and they'll be like, I'll be like, well, how much are you kind of looking to get started with? What are you trying to risk in the beginning? And they're like, you know, I don't really feel comfortable. So, you know, maybe I want to start with $1,000. Okay. And I say, okay, you want to start with $1,000. You can put $1,000 into like a Robinhood account and you can buy $1,000 worth of stuff, or I can start controlling basically $1,000 worth of stuff. And I only need like $21.12 in my account to actually get it. So it just the currencies has just it's just like it's an amazing amount of like leverage and amazing amount of buying power. You can make anything worth whatever you want. It's something that I cover when I kind of teach people anything. But if you could come up with numbers and say, listen, whatever I want to do, whatever I'm about to do, I don't want to risk more than XYZ dollars. And whatever that number is, you're just kind of manipulating this, whatever it is. It doesn't matter what it is. You can just play with this thing here with your unit size until whatever you want to make or whatever you want to lose gets basically to where you want it to be. Now, anyone that kind of trades, like if you kind of to compare this to like, say futures market, for example, you know, quite often I look at like, it's like say I wanted to trade oil, right? I can buy 100 barrels of oil. I can't buy 101 barrels of oil. It's like I could either buy 100 or 200. You got to kind of move in kind of those increments, where in currencies, you don't have to move in those type of increments. So margin is a very, very, very powerful, very, very, very powerful to you. So hold on one second. Let me change this. And hold on, just changing my screen here. So I'm going to show you a little bit about kind of like what I do in here in just a bit. But basically, the strategy that I have to pass along to you was something that I was able to kind of pick up and develop by working with institutional and licensed money managers. You know, I had the opportunity of working on a retail desk, and I could just like you could just see that, it's like people just kind of come into this, and I could just see that, like, listen, they don't really understand how to manage risk the right way. They don't really necessarily have a strategy. They're trying one strategy, then they're moving to another strategy, then they're moving to another strategy. And as they move through all these different trading strategies, it's just it just becomes this downward spiral. And then I started working with these institutional and licensed money managers, and it's like, it was such a night and day difference. It's just like, they're so disciplined to what they do, and they're so structured with what they do. And they're just managing risk with just a kind of like a completely different focus. And that's where really the light bulbs went off for me. What I'm about to show you, and I'm going to kind of introduce this here to you in a bit, but the strategy I can show you is going to be for, kind of short-term trading, which means I could be something where it's kind of intraday, or if I don't close it today, it moves into tomorrow. I got some medium-term setups where we could have positions last for a few days to maybe a couple weeks. And then for those of you that maybe have kind of sit on their hands, type goals with this, where I can show you how to kind of place trades with the intention of being in them for weeks to months and potentially years. I haven't had a trade over a year yet, but I've definitely held trades for months at a time. What kind of traders do I have in here with me today? Do I have kind of short-term traders, swing traders, long-term traders? Feel free to comment, and I can just briefly show you what I do. One of the things that I love most about my trading strategy that I have to share with you is that we are trading swing trader. You got all of them, Roberts, all of them. But what I'm going to show you is that I put the market into a very, very fixed structure. It's one of the things that I appreciate the most about the strategy that I have to just introduce you to, because it's going to promote discipline, and it will help you reduce emotion. Some people in this room have been trading with me before. They kind of get an idea of kind of what I do, but I execute trades in the same spots. I close trades out in the same spots. You'll see I basically build a ladder into the chart, and then it's just kind of like climbing up and down the ladder. My structure is going to focus on the decimal breaks of the US dollar. They are magnets for big institutional money. The whole world, basically the whole world's economy, let me add one more word there, but essentially the whole global economy is basically run off of United States dollars. And what we will be putting a lot of focus on is how the actual dollar is broken up. You think about a dollar, you can only really break it up into increments like penny, nickels, dimes, quarters, things like that. And I'll show you that in a bit. Offers fixed entry and exit points, less guessing on where to get in and where to get out. Can be used 24 hours a day. Forex works around your schedule, not vice versa. Do I have anybody in this room that says, hey, listen, evenings would kind of be my prime time for this? Like, hey, man, I got a day job. I got things to do. I would love to be able to kind of look at something in the evening. It's still open. It's still active. For those of you, all right, so yeah, Mike. And this may be your world. I'm kind of like a round the clock guy, but I would say that, I can find myself a night owl from time to time. And this is by far one of the greatest markets for kind of around the clock trading. So one of the things that I'll kind of introduce to you here. Let me just show you a couple things here real quick. I'm going to basically kind of talk about a few things kind of at the same time. And one of the things is I'm going to show you just kind of really big picture stuff first. Unfortunately, I don't really have the time to kind of dig into anything kind of too short term. I think I would need a little bit too much of a build up for that. but I can introduce a few things to you all at the same time. So what you're actually looking at is you're looking at the dollar versus the Japanese yen. The dollar versus the Japanese yen, for those of you that are not currency traders, this is one of the most popular currency pairs on the planet. Now, one of the things about that I love about currencies is, as you can see, I mean, they're trending markets. It's a trending market. I was trying to go even just a little bit lower than, okay, that's going to give me plenty. But there's a couple of different things I wanted to introduce to you here. Is that one of the things that I like. One of the things that I like about currency trading is a lot of like the valuations on how currencies are moved are based off of like those headlines that I was sharing with you at the very, very beginning of our time together, where it's like this central bank is doing this, and this central bank is doing that, and this central bank is doing this. One of the things that I do and kind of educate people on is like, we're going to look at central banks and we're going to kind of compare them. Now, you don't have to have like a PhD in economics. You don't have to have like, you don't really have to, you just need to have a very, very basic understanding of just a few, just like a few levers in a sense. And I pull up this pair to begin with because I'm actually very, very excited about kind of what 2023 could actually bring. But I'll even start with here 2022, just to kind of introduce something to you. So if you look at 2022, like for 2022, I can walk into a kindergarten classroom and I can basically go into that kindergarten classroom and say, which way is this going? And I think a room full of 5- and 6-year-olds will be able to tell me, well, that's going up. And the reason why this currency pair was going up like this is it was as basic as this. The United States is raising interest rates and Japan is doing nothing at all. And so one of the first moving parts of all of this is that when central banks raise interest rates, the value of currencies go up. And so if I can find a central bank that's raising interest rates and one central bank that's not raising interest rates, this one's raising, this one's not, currencies tend to go up. Now, one of the things that I wanted to bring that up first, this is kind of show you kind of how something trends. But then I also wanted to kind of introduce to you kind of what I do. When I kind of pull up a chart and I kind of look at a chart like this for the very first time, and this is basically all that I have, I'll be brutally honest, I get very, very confused about kind of where I should get in and where I should get out. All of a sudden, basically everything starts to look the same to me. I can look at this currency pair and say, okay, well, if this thing goes down, should I start thinking about buying here? Should I start thinking about buying here? Should I start thinking about buying here? Is it here? Is it here? Is it here? Is it here? If I start selling, should I sell here? 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 It's this whole like game of like, I don't know where to get in or I don't know where to get out. Is there anybody in here that can relate to that? I don't know where to get in when I look at a chart and I don't know where to get out. Anybody kind of feel that way sometimes, time to time? Anybody care to at least admit that? Yeah, Franco, he gets what I'm saying. Well, listen, yeah, Sharon's like, oh, yes, okay. So listen, the big answers we're all searching for. I 100% agree, Pete. So like one of the there's things that I do is I introduce a structure. Like you're not going to necessarily really understand this structure just in this like very kind of brief introduction. Like it's going to take me a little bit more time to kind of explain it to you, but I'm just going to basically show you something here real quick. Now I have a lot of different structures and basically in which I want to work with, but basically here's some very simple concept for you to understand. I want you to think when I say the color, if I said the color red and green, what action do you typically think to take with the colors? Like if I said, what action do you take with the color red? What would you say? Action. Red. Okay, well, I'm going to actually use like, think stop. I'm actually going to use like, I guess I kind of worded that the wrong way. Think of like a stoplight. There we go. Yeah, so I'm thinking like green, like stop and go, right? So listen, I break up the market into very specific increments. And I break up the market. It depends on kind of like the pairs and things in which I'm kind of looking at. I'm going to show you something real big picture first. Green goes, stop red. All right. So here's another question I'm going to ask you before I introduce anything. I'm going to say, and I want you just to type something in, okay? I want you to, if I said, give me a number between 1 and 10, go ahead and type in a number between 1 and 10. Any number that you want between 1 and 10. Okay, 7. Okay, 5, 4. Okay, all right. So I'm just gonna, okay, so I just said, give me a number between 1 and 10. And I want you to kind of just pay attention to how your brains actually work, right? You notice how your brains actually work, and every single person that typed a number in, except for Kento, maybe Kento's been here before, knew what I was, you Roxanne. Okay, yeah, some of you kind of remember this, but I want you to think of all of you that just put whole numbers. All of you put whole numbers. I just said, give me a number between 1 and 10. How come someone didn't say 3.33? How come someone didn't say 5.64? How come somebody didn't say 8.32? How come somebody didn't say 9.1? All of your minds essentially ran to and were gravitated towards some type of whole number. Well, listen, I have a whole trading strategy built around that very that very kind of mental concept. You know, I want you to think about and I say like decimal breaks of a dollar, right? Like there's currencies are only broken up. Real money is only transacted on there's nothing priced in fractions of a fraction of a penny. We're just I only focus on real world numbers. And so basically, just to kind of if you kind of look at it this very first one, I just broke up the market, basically kind of 10 at a time. So all I'm doing is I'm putting the market into a very specific structure. Now, without giving really anything away, you see these green lines? The green, I'm just very simple. I want you to look at it this way. Green means go, red essentially means stop. And so I have these strategy and I have these price points where it's I want you to think of I'll even introduce the red lines as I want you to think about, I call them VIPs. VIPs, for what I'm going to teach you, that VIP, those red lines, they're going to stand for very important price, okay? So I want you to think of VIPs. VIPs in your kind of everyday life. If I went to 7-Eleven, you know I'm not going to see Joe Biden or Kamala Harris in there buying a Slurpee kind of by herself, Joe Biden buying a Slurpee and a Slim Jim. I'm not going to see that walking into 7-Eleven. If Joe Biden wanted to be out in the public, what would Joe Biden need to have with him? What would he need? Bodyguards, right? He would need some type of protection. So basically, and listen, you know, you spend a couple of weeks with me in a boot camp. I'm going to show you things that you're not going to be able to unsee. But basically, I want you to think of these are your VIPs, right? And you can't go anywhere without his wife. That's actually a good one, and that is actually true. But I want you to think of so this is my VIP. I got 2 greens. These are bodyguards. Okay, I'll just put it this way. And so basically, the way I teach currency trading is that if something breaks above, if price is in between, price is going to get contained. It's I use these bodyguards, and prices are going to kind of its job is to kind of, the bodyguard's job is to try to kind of keep price in. And so I have this strategy, and I have the way of looking at the markets where I kind of play off of these different bodyguards. And I play this game where if prices can get above something, that's a tell that we're going up. If prices can get above, it's a tell that I'm going up. If prices get below, it's a tell that I'm going lower. Now, one of the things, and I kind of spent a little time, probably more time than I needed to, or to kind of just briefly explain this to you. But one of the reasons why I kind of did spend the time, and the reason why I'm showing this to you on this really, really big picture chart, is because as we enter into 2023, the real question is going to be what is going to happen with the stock market and what is going to happen with the dollar? Now, I know that in this audience, I have a lot of stock market people in this audience. I'm a stock market person as well. And one of the things that I feel can kind of help you with this, not only with what you're doing not only like, I'm going to show you this in currencies, but what I like understanding the currency side of this, I feel can also help you be better in like the investing side, maybe not so much the trading side, but like the investing side of equities, because we're entering into this new shift in central bank policy where we were raising interest rates. And this is the exact opposite really of like when we raise interest rates, this is what the dollar does. The dollar goes up, the stock market goes down. And now we're entering into this like shift where we could potentially be like, we're slowing down the hike. We'll eventually get to the point where we don't necessarily have to raise rates anymore. And the reason why this discussion is important right now is because the shift is already starting to show. And it takes a while, like this is something I could even go further back. Like this, like it takes a while to kind of wind this up. And now we're going to wind this down. One of the reasons why I'm even also sharing this with you is that we are entering into potentially a new trend. Now, I'm not necessarily giving much away here, but like the fact that, you know, I can even just say like, this to me is flashing big sell signals. Now, like just to kind of put something into perspective for you, this is like some of these, like I do these, what's called a home run setup with people. And just to kind of put something in perspective with these type of trades, and this is not something that I just want to show you because it's not going to take very many of these, you getting just a few of these right here and there for you to really kind of like look at your returns over a year or whatever, just say like, listen, okay, this was like, that was pretty great. But even if I was just to give you an example with a lot of these, like this is more like someone said, like, I like longer term stuff, whoever that was earlier, this is a little bit more for like, this is the type of setups that I would do with somebody that is interested in kind of the longer term setups. You're basically trying to get 500 pips here. So watch this. So 500. And let's say I risk anywhere between 50 and 100 to make 500. Now, to put something into perspective, like I never risk more than say like our, you know, this like rule of 2%, don't risk more than 2% per trade. So basically I just got to get that number to, just to give you a perspective. Okay. These type of setups, if I had a $10,000 account, I would need to have this much margin to basically be able to place this trade. This is my potential risk, 200 bucks for a potential return of $2,000. So it's like 200 for 2,000. I don't know about any of you, but I'll take those type of that type of risk to reward on any given day. What do you guys? What anybody in here think? Is it 10 to 1 risk to reward? Would that be something that do something for you? So Lou W asks, do you watch all the markets with the same type of VIP and body cards, or does it change based on country, currency, and pairs? And I'm going to say it depends. It does kind of depend. The VIPs and all that kind of don't necessarily change. But listen, one of the things that I wanted to show you, just kind of like a bigger picture setup, just to help you kind of get excited about if you're not in currency trading. I'm going to tell you right now, like these like shifts in monetary policy, like they don't happen all the time. And like right now we're on the cusp of like a new one. You understand, like when we raise interest rates and lower interest rates, we do that in kind of a very, very slow grind. And so some of the best trading opportunities come at the beginning of the new changes. And so we were on this, like we were raising interest rates like crazy. And now we're getting to that point where we're going to slow down and potentially start to unwind. And that's where like the beginning of these new trends start. And it's in those beginning parts are typically is really honestly where they can be kind of some of the most powerful parts, or some of the biggest pushes. But to kind of like just to kind of answer Lou W's question here, as far as like you know, what I do and how I teach it to you. like, I'm not going to be able to, spend the time and go through each one with you. But what I'm going to do when you guys come into the classes with me is, depending on what you like to trade. So when I was, when we were talking earlier, and I was even asking you, I was like, hey, like, who are my swing traders? Who's my short-term traders, long-term traders, whatever that is. What I'm going to teach you how to do, is I'm going to teach you how to look at the market and basically different points of view, or kind of different levels of aggression. And so, like, I could start out with you and I'm showing you like super big picture, super slow, kind of slow and steady trades that are going to last for kind of potentially weeks or months. And depending on kind of your speed, it's your speed, we're going to start kind of, we'll start speeding things up. And so I got long-term setups. I got more of like swing setups where we might be looking at the market with a duration of a few days. So just to give you an idea, this is a 1-day candle, 2 days, like kind of a 3-day duration, trades that could last, a week, a couple weeks, just depending on how fast the markets move. And what I've been getting into almost on a daily basis is I've been doing trades what would be a little bit more intraday or overnight, where I placed a trade today, it's going to close out today or be closed out tomorrow. But part of it is just based off of finding your speed, in a sense. But what I do is, like, it's always like I'm breaking the market up into a structure. And once you start understanding the structure, it's going to make your trading and investing, I'm thinking, a lot easier. I'm a breakout trader by nature. I'm a momentum trader by nature. I will sit there and I'll just kind of watch the market depending on whatever time frame that I'm looking for, and I will take signals. And it's like, yeah, I'm telling you, I'm not going to be able to make it up. But like, if something crosses above something, I'm just going to start buying into it and aiming for basically, you're climbing up and down a ladder, without even, like, I just want you to kind of look at, 2 red lines and just kind of ask yourself, whenever they kind of start breaking above and below something, can I make them connect, right? If something gets above one, can I make it go to the one above it? If something gets below one, can I make it go to the one above it? And I just play this game of like making them connect. And I'll honestly, it's a simple strategy. It really, really is. And like, I feel that, like, for those of you that are like, I'm kind of new to trading, or I'm interested in trading. And I'm not even talking about, like, I know this is like, I'm going to be teaching this class and like, here it is in currencies, but like, it's actually, and even some people that know me that are in here can probably comment on this as well. But it becomes this strategy or this structure that, honestly, for those of you that are interested, you can start to apply it to other instruments and things as well. But what we're going to be doing, in this class, is I'm offering very, very fixed entry and exit points. There's going to be less guessing about, okay, if I get in, first of all, you're going to know where you're going to get in. And as you get in at these spots, just based off of kind of what I'm showing you, this is basically how this works, based off of any of these lines that I get in, because how I'm going to teach you how to do this is basically, you're going to get in a line and you're going to get out of a line. And once you understand the structure, it's like, it's like, okay, if I get in at this line, this is the line that I get out. The very first thing you need to learn how to do, I'll teach you how to build the structure. Once you have the structure, then we just got to start, you'll have to start learning the lines. But as I said, 24-hour market does not require around the clock monitoring really at all. So William Tao asks, are your VIP and bodyguard lines similar or derived from previous support and resistance levels? They're actually not, William, and that's a great question. My red and green lines are based off, they're very specific prices that never move. They don't change. They're not based off of support and resistance. They're not based off of anything. I don't, listen, I could take you deep into the matrix, when it comes to this, but honestly, like, I'm going to use charts in this boot camp to basically introduce you to a strategy that the deeper you get into this trading strategy, the less you'll find yourself kind of relying on charts. Like, I use charts to basically demonstrate a trading strategy that doesn't necessarily require a lot of chart analysis. So if you're the type of person that feels like they get paralysis sometimes because they're just like staring at candles and they're moving from one candlestick, one time frame to another time frame, and is it this chart pattern? Is it this chart pattern? Is it this chart pattern? That's not how I'm placing trades. I'm placing trades based off of very specific price points that, to be brutally honest, I don't necessarily typically need to see a lot of patterns. I don't necessarily, it's just like, it's a certain price point, starting at a certain price point, ending at a certain price point. So listen, your first step to becoming a successful trader, one of the very first things that I need to do with you is I'm going to have to teach you the basics. Honestly, I introduced like a couple terms in the very, very beginning of our time together. But I'm going to spend some real time with you, really explaining margin to you, explaining leverage, showing you more margins, showing you more leverage. You got to understand the different classifications of currency pairs. What are the most heavily traded currency pairs? What hours should I be trading these currency pairs? What are my costs to be trading these currency pairs? You just need to understand the basic ways and how this whole system works. This is as I kind of mentioned earlier, this is just like a different animal. It's like if I was trading equities, one of the things I need, you have all those, I got all these different sectors that I have to be thinking about. Is much more microeconomic, like what's going on with freaking regulations in technology and new laws being passed in healthcare and some supply chain issue with China, what's Apple doing and what's Amazon doing? What's their earnings per share? All of these different things that aren't necessarily the focus of this market. So you need to understand the focuses of this market. I've already mentioned this, understanding things like volatility, supply and demand, bullish and bearish trends. This is such a trending market. It's one of the, when this market trends, it trends, and it can trend for a very, very long time. And if you just can understand when these new trends are starting and ending and all of that, it's already going to be, it's going to be a completely different game for you. We'll go over the different market hours, open and close time, significance of the hours, and the currencies at the times are open. Lou asks, so Robert asks how many trades one should have open per account, and we'll get into that here. I'll answer that in a question. Do you use sectors to decide what you trade daily? And honestly, and also too, just before I get in, I'm going to answer your question here in just a moment. That's it was a perfect kind of way into this. Hold on one second. I should have done the other, just I also teach you how to use a trading platform. I've been I think a lot of you, maybe some of you in here use TradingView. If you use TradingView, you already know how to use the trading platform. But I use typically TradingView, and I use Awanda in the classroom. So Awanda is free, TradingView costs something. So it's just a matter of which one that you want. So Lou asks, do you use sectors to decide what you trade daily? I use, much like Pete, he's got his kind of way of scanning the markets and looking for the best stocks on any given day. I have my own scanning process that I go through to figure out which are the currency pairs to trade that day. And so it's not necessarily sectors, but I use calendars and momentum. So this is just some screenshots from Forex Factory. And it's one of my favorite websites on the planet, but I use it every single day. And what I'm using it every single day for is I'm using it for, hey, what type of events do I have that are coming up and going to shake the market? And I time a lot of the events that I do, I do these live events, I'll time it around. I actually have one tomorrow morning. Here, actually it's showing here, right? It's here, December 9th, tomorrow morning at 8:30 a.m. We have some inflation numbers that are actually going to hit. So before 8:30, I'm actually going to be running a live trading room, and we're going to trade that inflation. So Lou, I don't know if I'm going to buy or sell before that report, but based off of how that report comes out, I'm going to try to make a play on it. And one of the things that I teach and kind of go through with people is like these type of reports and how they come out, what type of play do I make? And the other one's just momentum. I'll look at how a market's performing over periods of time, and then I'll use that to basically create biases of, am I going to buy something or sell something? I go through a lot of I use different kind of like reports and kind of some big picture analysis. As I mentioned, I don't necessarily, listen, I do not have a PhD in economics, but I understand just the very few basic moving parts. I think you just need, if I can just get you to freshman level economics, I feel like you can be a pretty good currency trader. And so I have a different type of daily routine that I go through. And so I'll be looking at different reports and headlines and push notifications. These are things that I will, obviously be going over with you if any of you decide to kind of go into this world with me. And I actually I use kind of a Discord to kind of kind of share things or try to share things as they come out. But the central bank the central banks become really the biggest major focus for me. You don't have, the thing about central banks, and you don't look at this oh my God, that just sounds so tedious or boring or whatever, but it's really not. Monetary policy really only changes, they have big policy announcements, really major ones, maybe once a quarter, lately, because of the way that we've had kind of interest rates hikes month after month after month, but that's not necessarily common. But there's some things I look at. All I got to figure out is how is the market pricing in rate hikes. If they're pricing in rate hikes if they're pricing in rate hikes, I'm going to try to buy that currency up. If they're, and then it's kind of vice versa. But we'll kind of get into that. But I'm constantly I'm constantly scanning prices and themes and all sorts of stuff. I'll show you just quick, I mean, I don't know, a lot of you haven't been able to, see, see my Discord. This is it. But I've been in this, really honestly, I just really got on with, with all of this, really in the, Forex channel, really in kind of the last month or so, and almost on a daily basis. Almost every day, I'm posting some type of potential kind of alert or kind of trade setup in there. So to give you an idea of kind of what our boot camp looks like. Well, first and foremost, I have one that actually starts on it actually starts this Monday. What I think is actually really cool, I've never ever done this before, but I'm going to be doing a night boot camp. I've never taught a class at night before, and I've never had it, stretch over this period of time. And I thought it was really neat. And I thought it was a great idea because, I just to be able to kind of, reach people when, they're, kind of off work in their evenings and things like that. And it doesn't necessarily require a ton of your time every single night. And so we're going to do this basically over 2 weeks, but basically Monday through Thursday. I'm going to spend, I'm going to spend a couple hours with you, and just kind of teach you how this works. And to be honest, this is a holiday tuition to me. I've been in trading education for like I mentioned, this is probably my 10th year, and I will tell you right now, the strategy that I have to teach you over that 2 week period of time, is extremely valuable. It's made it's absolutely changed my life. And so to be able to kind of be introduced to it for that price is a crazy deal. And I would imagine that some people that have taken my class can probably agree to that. But you know, the first couple days, what I'm going to do with you first is I'm going to just kind of introduce this whole market to you. So for the first couple days, Giovanni, you are the man. Thanks, buddy. Listen, over the first couple days, I'm going to teach you just the basics of this, just the understanding of like how this whole market works, or excuse me, the history, terminology, market structure. So the first couple of days, you're just going to learn kind of the basics of the market, like the things that you need to understand before we can actually get into the actual live trading. Day 3 and 4 is when I actually get into the actual, like, the market of this. You know, I'm gonna let you know, like, the vast majority of this boot camp is just the way that I teach people how to do it. Is I teach you how to do this in the actual, like, I do this in the live market. I don't use PowerPoint slides. I don't have you watching, you know, I don't do this like through recordings. I don't do this with like pictures of what a setup would look like. Like, I'm doing it in the actual, like, the real market with you. The whole class, except for like a couple lessons here and there, the whole 14 days, the time that we're together is going to feel like a live trading room. It's a live trading room. So days 3 and 4, I'm going to teach you how to build that structure on like dollar pairs and non-dollar pairs. And we're going to, like, I'm going to start introducing to you this whole like momentum trading, and start teaching you this whole, like, you know, VIPs and bodyguards and green goes and the red stops and how do you use all of that. That gets into like 3 and 4. And I'm going to be placing trades in here with you. I don't just like say like, okay, here's what we do. Like, I like to try to, you know, hit buy and sell right there in the class, and actually just see what happens. So Monday through Thursday is going to be live. Over the weekend, you'll be able to kind of rewatch the lessons that you would have learned through there. You're going to have access. You're going to have access to my Discord as well. I'm going to do live events during the week. And so while you have access to me in the evening to learn the strategy, during the day while you're in the boot camp, if I have any live sessions where I'm actually like trading an event or something along those lines, you can be part of those live events as well and kind of just watch what that whole environment looks like. The very next week, we'll get into the actual like risk management side of this. I'm telling you, like, the risk management, the way that I approach risk management, the way that I teach risk management, this is not something, again, that I've developed like, oh, I'll just figure this out on my own. I use risk management principles that I picked up from actual licensed professional traders. And I'll show you how they manage the risk to make this trading as safe as you can possibly make it, while the opportunity, obviously, to maximize the rewards. And then, you know, so like I'll go over correlations with you, how to trade the news, where to get, like, I'll show you all of the websites that I use, and I'll give you my daily checklist so that you can go through my checklist and you can kind of go through your trading day as I go through my trading day. So, yeah, we'll be doing all of that. And then as we get into next week, so the very first week, we'll be focusing on yen pairs. On the first week, we'll be focusing on, non-yen pairs, like dollar pairs. And then the next week, which is like the next week of the boot camp, we'll be focusing on yen pairs. So we're going to keep them separate because they are different. And so we'll do a week of non-yen pairs, non-Japanese yen pairs, and then we'll do a week of yen pairs. So my favorite pairs in the world to trade either have the dollar in it, that will probably be our first week, or they have the yen in it. That's going to be our second week. So that when you walk out of the boot camp, you have a general and better understanding. Here's how I trade dollar pairs, and here's how I trade yen pairs. And then, days 13, 14 just allows you to just kind of rewatch things. As we mentioned, you'll be able to get into the recordings, and then hopefully start placing trades, and then we'll just kind of take it from there. So do any of you guys have any questions about, this, currencies, or just this boot camp? I know that I feel like I went through a lot of information very, very quickly. But I just had so much to try to get to you, but I just didn't know. Hopefully you can, if you have any questions, now's the time to ask them. But I will say, as you guys are kind of typing that in, it's just like, I am really excited to be part of this Top Trading Pros. And one of the things that I am the most excited about being here is that I just have way more access to all of you. I have spent close to now a decade in education, and some people have been with me for a lot of that, and it's like I am with you very sporadically. I couldn't do my trade alerts. I wasn't, I could do maybe 1 hour a week of like these live sessions. And now we can have many more live sessions together. I can do trade alerts every single day. I'm doing these boot camps every single month. They're always recorded. If you're part of my subscription, you can just come to that boot camp over and over and over and over again without having to pay for it again if you're in the subscription and stuff. So, so first of all, how much time do you spend a week on Forex? Honestly, John, that's going to be completely up to you. I typically, I always kind of have this in the background, but I don't necessarily require a ton of time. If you come to my boot camp, I will show you what I mean by that. But it just depends on what you want to do. I've taught people how to do this, where it's like, I can only look at this maybe for a half hour in the evenings. And honestly, for some of the trade setups that I have to do with you, honestly, that's all it would require. And so it will depend on how much time, if you want to get real aggressive, if you want to be like a day trader, like a chart ninja, that typically requires the most time. But if you want to be a swing trader, or kind of like, I place a trade today, it'll be closed by tomorrow, you'd be surprised. It doesn't require that much time at all. And it also is not going to require you to be like, okay, I need to be glued to this 8:30 a.m. every single day. At 8:30 a.m. I have to be there every single day. Fortunately, we don't have to, I don't necessarily have to do that either. So Sharon asks, is prior learning experience necessary? No. Honestly, Sharon, one of the things that I appreciate about this strategy, I feel like, and maybe some of us, maybe someone that has had my class before can just make a comment on this. But honestly, it's probably one of to learn the trading strategy, initially, I feel like it's one of the easiest ones out there.